I know you guys can hear me with this open. Trying to do the screen share at the same time. Let's see here. You guys hear me? I think you can. Oh, sweet. You can hear me? Perfect. All right. We will give it a minute or so here. Give it a couple minutes for folks to file in. All right, we'll give it a minute here for everybody to come in, and then we'll get started. You guys saw the new iPhones came out. I'm super excited about that. Give it a minute and we'll get started. Can everybody see my screen and hear me? I'm going to assume yes, because it looks like it's working like it should. I am on my desktop today. So, fortunately, my little MacBook Air, we're going to have to put this little guy out to pasture. Looks like he just, he's not going to make it too much longer here. So, it's been a faithful computer for almost 7 years. So, can't complain. Working on a couple of rehab estimates right now for my personal house. Get started here in another minute or two. Okay, let's get started here, guys. I'm going to start with the election first, and then I will get into some real estate stuff, some finance stuff. Friday's usually a slow news day. So I posted something of this effect here for the last probably 3 weeks now, in that a lot of people are looking at what's going on in 2020, similar to what happened in 2016. And I keep telling folks, I'm like, if what happened in 2016 happens in 2020, it will absolutely be unprecedented. And why is that the case? And it's right here. Really, the largest error was in 1948, where Truman won by 5%, despite being behind 4.4%. So in order for Trump to win, if the polls don't start to change, meaning they don't start to tighten, in fact, let's take a look. Let's go to Real Clear Politics and see what the latest polls are. If they don't start tightening, I'm not sure how Trump is going to pull this out. I'm really just not, I'm not sure. Let's look at presidential polls. I mean, you've got, these are the battleground states, and Biden has, in some cases, leads that are double digit compared to Hillary. So it's going to be interesting if they are that wrong. I don't know if they are. Everything, when I sit down and talk to the guys that know a little bit of this math, the consensus is they have to be wrong. They have to be twice as wrong as they were when Hillary and Trump were on the ballot. Now, if the polls start to tighten, then that'll tell us something completely different. Trump may have a real chance at this thing. But from my understanding, there's 20 plus million votes that have already been cast. So we're literally in the middle of election night, if you will. All right, let's talk about real estate stuff. Vegas having huge problems. The Encore basically is closing down certain times of the week just because there's not enough traffic. In fact, I'm going to Vegas in November for a conference, if you guys can believe that. We're going to a conference there. I'm looking at airfare And I think round trip is going to be less than $300 or maybe 325, 350. It's going to be super cheap to stay. We're probably going to stay at Caesars because that's where the conference is at. It's just going to be crazy cheap to go. No one's there. And why is nobody there? Well, here's hotel occupancy rate is down 30%. So I have a buddy of mine that's a commercial real estate guy, and he was telling me about some friends of his that are literally flying around with piles of cash, buying up hotels at 40, 50% occupancy at fire sale prices. In fact, that's your hotel occupancy rate by week of year. Now, note, this is not happening with Airbnb. Airbnb is having record all-time highs. Yet, the hotel side has been a real bloodbath. I mean, down 30%. In fact, the blue is the median occupancy for the last almost 20 years. And you can tell, I mean, it's bad. If you're in the hotel business, it's terrible. Now, what does that mean? It's a great time to buy. I mean, if you want to get into the hotel business, now is the time to get in there. It's just an absolute mess. Toxic mix, U.S. air travelers are down 65%. Ticket prices are down 25%. This is it. It's absolutely insane, and it's not coming back anytime soon. When we fly, there's nobody at the airport. It's really creepy. It's like you're at the airport at 2 o'clock in the morning. There's no air travel. There's virtually no business travel. And if you look at these international flights, I mean, domestic is down 80%, but trans-Pacific, transatlantic, and Latin American is almost down 90%. I do love this. If you guys are reading any of the financials on the airlines, you're seeing this metric right here. Delta still has $21 billion in cash or cash equivalents. And what they're doing is they're using this metric called daily cash burn. So if you're looking at like Southwest Airlines, a good example, and I can't remember how much they've got on hand, but essentially it's how much cash do we have as this industry continues to fail. How much longer can we survive? It's just an absolute bloodbath. Now, the flip side of this is I would start looking at doing a little traveling. In fact, let's see. Let's go to Southwest Airlines website. What they usually have specials. Let me see where their specials are. I was really hoping there's usually a page where you can click on and it'll show you the lowest fares. And there's just some really cheap places to fly. If you want to go to Mexico, now is the perfect time of year to go down to Mexico. The weather's turning here in the United States, and it's super cheap. Cancun is a cheap flight. Let's take, let me pull that up. Let's look. Here we go. Let's search this, and then let's pull up the low fare calendar. This is for Cancun. I mean, you're talking $100. You can click on any of these. We got to select. Hold on a second. Here we go. You're talking about dirt cheap flights. I mean, $142 return flight, $108. I mean, to go down to Cancun from Houston makes a lot of sense. So I would, if you guys are interested in traveling, this is the exact time of year that I would be doing it. I would start looking at traveling. It's a perfect time to be traveling. Let's talk about mortgage rates. Mortgage rates just hit an all-time low this past week, 2.8. It's super cheap out there. Here's what's interesting, and they throw this little chart in here. This is the amount of debt that has negative yield. 16 trillion in debt now trades with negative yields, which is crazy. If you guys remember a story from a couple of weeks ago, maybe it was a few months ago now, where I'd mentioned that 60% of global debt is 2% interest or less. Debt is cheap. Debt is absolutely cheap. Here is the real telltale sign of what's going on in the marketplace is this right here. The availability of record cheap loans, which is unlikely to change with the Fed signaling it will hold its benchmark rate near zero through at least 2023, has fueled a home buying spree, which will, while bolstering the pandemic economy, has resulted in yet another bubble. I don't agree with that last statement, but the rest of it is true. Meanwhile, the surging demand for the scarce supply of properties on the market is pushing up prices, putting homeownership out of reach of many Americans and leading to even greater wealth inequality, which is how we got here in the first place. Adding insult to injury, this is why I don't think it's a bubble. Adding insult to injury, lenders have tightened credit standards to near record levels, presenting another potential obstacle for would-be buyers. Bang! That is why we do not have a bubble. It's one of many reasons. The higher the number here, the harder it is to get a loan. This right here is October 7, 2007, 2008, 2009. Obviously, in the middle of the crash, it was really hard to get a loan. It is, according to this metric, as hard to get a home loan now as it was right after the real estate crash. So I keep asking all these guys, I'm like, hey man, where's the bubble? I don't see the bubble. Show me the bubble. What's the bubble? Just because prices go up doesn't mean there's a bubble. So this is really, really interesting stuff, and I just don't see it changing anytime soon. These are rates. That's the 30-year, 15-year, and a 5-1 ARM. This is 2011 all the way to 2020. You can see it's just absolutely collapsed. They've never been this low before, and I don't think they're going up anytime soon. However, there is some analysis out there that rates will start to rise at some point, but I don't think it's going to happen until 2022. And let's talk about delinquencies and foreclosures, because I keep hearing all these folks that are like, Jason, you understand, there's all these foreclosures. These foreclosures are going to come on the market, and the market's going to crash, and we're all going to jump out of windows and all this other crazy stuff. And from Housing Wire, as vacant foreclosures increase, so does buyer interest. We have so many buyers out there that when something hits the market, it's gone. In fact, let's go down here, just some anecdotal data here. Price per square foot and bidders per asset, which is increasing, meaning when a distressed asset hits the market, it's immediately sucked up. It's immediately taken in by the marketplace. This is from auction.com. Our 6 million registered website users have enough liquidity to weather a storm and are ready and able to quickly absorb the recent uptick in vacant foreclosures. They have proven they can effectively return these distressed vacant properties to occupancy. Now, here's where things get interesting. And read this. Competition for vacant REOs specifically was just as strong, with average bidders per asset also increasing to a new year-to-date high of 3.6. That competition helped lift average price execution of vacant REOs to 104.8% and slightly above 105%. Let me translate that to English. When a foreclosure hits auction.com's website, the average price at which the winning bid is accepted is 105% of the list price. So they're paying even more for them than what they're listed for. Here's some anecdotal evidence here. We'll put a home on the market and we'll have 30 offers in a week, and most of them are above list. If you had asked me about gentrification in Newark in 2012 and 2013, I would have told you I'm not worried about gentrification. We just need to get properties reoccupied. But now gentrification is an issue. So what's happening? These properties are going into foreclosure. They're being bought by investors. They're being rehabbed, and they're being bought. Well, Jason, what about rentals? All of our rentals rent immediately. We do aim to increase home ownership overall. This is a nonprofit focused at increasing home ownership in certain parts of New Jersey. We do aim to increase home ownership overall, but we also know that we have to maintain and increase the quality of rental stock, because not everyone is a homeowner and not everyone wants to be a homeowner. So again, if you're waiting for this big crash, it's just not going to come. There's no crash coming. I went ahead and got into MLS. This is the first time y'all are seeing this. This is Houston Area Realtors. This is HAR. So I'm logged in. And currently, let's change the map. This thing pulls from properties from all over the place. So let's do let's look at the areas that Rob and I would invest in. And really, it's about as big as we go when you really get down to it. So using that map, we've got about 434 properties that are currently listed under $150,000. Now, that's 434 properties. Let's see how many went under contract in less than 7 days. So days on market, 7 negative. So 507. Oh, wait, hold on. It's still calculating. Beep, boop, 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 beep, boop. I don't know why it said that. Days on market, 7 minus. Oh, I don't want souls. I just want pendings. 150,000, 227. So there are currently 434 properties that are on the market, and 227 of those, 50%, will go under contract in less than 7 days. We need demand in order for this market below $150,000 to experience price reductions, meaning the value of the house decreases. We need 10 months worth of inventory. To put this in perspective, we essentially have 2 weeks worth of inventory. So we would have to go from 2 weeks of inventory to 10 months, which 10 months is 43 weeks of inventory. So we would have to go from 2 weeks of inventory to 43 weeks of inventory. It would have to crash by a factor of 20 in order for properties that make great rental properties below $150,000 experience price reductions. That's why I keep telling you guys, like it is mathematically impossible for us to have a real estate crash as single family landlords. It's absolutely, I can't imagine an event where you have a 20x, implosion. I mean, I guess if Iran starts shooting nuclear missiles at us and so does China, I mean, that'll be an absolute collapse. But definitely not at the 20x mark. So, all right, guys, that's all I've got for today. I am ready for some lunch. I'm trying to sneak down to the beach this weekend. Tomorrow is supposed to be fantastic. The cold front moved in today. We figured that out last night when I left the sunroof open on my truck. So we gotta go clean that up a little bit. But if you guys head over to mrtxre.com, it has all our events. We're looking for a couple more folks to join our mastermind. If you've got deals, you can always send them to me. If you want to join our fund and invest with us, you can send us a text to 281-401-9008. Text fund, and we will get somebody back to you with the information that you need. Thanks for watching as always, and I will see you guys